computer. All right, guys, good morning. This is Luis Moreno here. So I have Nancy Vandervelde. She is the Regional Sales Marketing Director. Is that right?
That's right.
With National General. And she partners up with Phil Messler, who is the Regional Sales Director. And he's not on this call right now, but they do work together. And we're going to talk about the National General product and how I utilize it and how to quote it and all of the ins and outs about this product. So I'm going to start off first with how I use it, why I use it. Okay. So I have a pretty sizable book of ACA, which is the Affordable Care Act clientele. These are people that are under 65 that I've enrolled into a plan. Okay. Now, these plans range in out-of-pockets anywhere from $900 out-of-pocket for those individuals who are very low income, all the way up to almost an $8,700 out-of-pocket. That's a chunk of change that they're going to have to pay if they're hospitalized, if they have to utilize imaging, lab work. It's a dollar amount that these ACA plans state on their summary of benefits that the insured is responsible for. Now, $8,700, Nancy, is not a drop in the bucket. Even if you have it, you still don't want to pay it out. Okay,
that's right.
So it is, and some of these people, and I would say not just some, but probably the majority of people don't have that $8,700 just sitting around ready to spend. Okay. So we've got some alternatives or not alternatives, but we've got something that you can pair with that ACA plan to help these people out. So that's the first thing we're going to talk about. The second thing we're going to talk about is sometimes the ACA product is not the answer for everybody. Sometimes we may have to do a short-term product. So National General does have a short-term product. We're going to talk about that on the second portion of this video. So Nancy, we'll kind of start off with enrolling into the or logging into the back office, right?
Yes, thank you. So you are already logged into your agent back office. That's going to be your central hub for if you're going to bookmark a website for National General, it'll be your agent back office. Once you're there, you can link to the quoting site. And the screen that you're looking at right here is our quoting site for the underage 65 products. So use this very streamlined quoting method where it says quote and enroll. Go ahead and just put in a zip code if you would, please.
Sure thing. So plug in the zip code and I'm going to go to go.
Yes.
Okay.
On the next screen here, we're going to enter the gender and date of birth. Before we do that, I want to point out the child only box. You'll see that that's really for short-term medical. You can write a short-term policy for a child. A parent does not have to be included in on that coverage. And it comes up pretty frequently. Maybe it's a court order situation. So just know it's available.
Now, let me just ask you real quick, and because I have a lot of these, okay? And with another carrier, you're required to insure the parent. Do we have to insure the parent here?
No, not at all. And the minimum age for the child is just 60 days old.
So 60 days old, it's court order. Is it going to be a fully underwritten product?
With short-term medical, they need to be able to answer no to all of the medical eligibility questions. As long as they can do that, typically that policy is issued. Okay,
got it. And we're going to have to put a parent on there just for the billing purposes or?
No, when you're running the quote, you'll see on the screen here, the only census information that we include is for that minor, for the child.
Got it. Got it. Now, when we apply, will the parent's information need to be put on there so that the parent gets the bill?
Yep. For the billing part, for the mailing address, for the email address, that will, of course, be the parents.
Okay. Perfect. Okay. All right. So let's hop back into the regular, I guess, the ancillary products.
Okay. Good. Okay. So where it says applicant self, that's really just your primary insured. So if you would enter some Information here, someone under 65, please.
All right, here we go. And then now tobacco usage, is that a rating factor?
Yes, it for some of the products, it does affect the rates.
Okay. How about prior medical?
Prior medical coverage is you need to answer yes or no if they've had any other type of insurance for at least 9 of the last 12 months. It's only going to make a difference on the rate for short-term medical, but we still need to answer the question, even if we're just quoting supplemental plans.
Okay, so we're quoting supplemental, and let's assume this is somebody who just got an ACA plan starting January 1. So we'll put no on here. Okay.
I'm actually going to ask, just so that we're all set up to when we transition to short term, let's say yes.
Okay, let's go.
That way I'll be able to demonstrate a few additional things for you.
Okay, got it. So they have to have prior medical 9 months.
Yep. And if you click on that little information circle right there, it'll give you a little help. And we're actually very lenient on what we consider other coverage. It does not really have to be a major medical. As long as they've had something that they used as health insurance for at least 9 of the last 12 months, you can say yes.
Okay, got it.
Okay.
All right, so we're there, and then we'll put a start date. So let's just say we're going to start February the 1st on this.
Sure. And we can do any day of the month effective dates as early as tomorrow, or at this point, you could push it out up to 45 days.
Okay.
We'll do February 1st, and then just click on the orange Show Plans button.
So I want to make some assumptions here. Let's just say that my insured here has an $8,700 out of pocket. Okay.
Okay. Now, what we're doing here is we're showing you a suggested package of coverage. Really, it's a nice reminder to agents that you can bundle products together to give more protection to your customers. That same strategy that you're talking about with an ACA plan. This one is a package with our own short-term medical. The short-term has an out-of-pocket exposure of $10,000, so they're including a $10,000 accident plan, a cancer, heart, stroke, a dental plan. So at this point, I'm going to ask you to scroll up just a bit, and let's just click on that big blue button that says See All Plans. This will allow us to see everything, and we can talk about how you can build your own package.
And one thing, people, and it took me a while to kind of, you got to wait a little bit. Okay, it's a little bit of a lag time, but make sure all your plans, show up here. I've had somebody go click, 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 and it's like, there's no accident plans. I'm like, well, you haven't let them populate yet. So sometimes we're running 100 miles an hour.
All right. So here we're seeing all of the products that are available for this demographic. We land on the short-term category. We can come back to that if you want to cover the supplements first.
Yeah, let's just do the supplement first, and then we'll tackle short-term.
Okay, sounds good. So scroll back up to those blue categories. The second blue category, let me just mention, these are the marketplace health on exchange plans, the ACA products. Now, these are not National General products. The only reason we have this here is for the agent who is contracted with these carriers, and they want to be able to easily do the enrollment and include our supplemental plans and build that package. So for an agent to really use this, they have to be contracted with the Molina or the carrier that's presented, and they have to have gone through the FFM certification and have their username.
Okay, got it.
Okay, and this is an EDE. It's an electronic direct enrollment. So it should be a very smooth process for agents who are using this.
Okay.
Okay. If we go to the dental category. So dental is the first supplemental plan that we have here. And National General has really expanded our line of dental offerings. That was a big focus for us last year. The first product that shows up is an indemnity plan. Now, this is a plan we've had forever. An indemnity plan, of course, pays according to a schedule of benefits. The beauty of it is you can use it at any dentist. It's going to pay the same benefits. So when you have your fancy dentist who doesn't accept any insurance, you can still use the indemnity plan. The richer benefit plans, though, are going to be the PPO plans. So if you scroll down.
And I'm just as I'm looking at these indemnity plans, I'm assuming as I'm working my way down, I'm seeing a higher premium. Does this mean the benefit is increasing?
Yes, it does.
Okay, got it.
The richer benefit plans here are the select dental plans. And I'm going to ask, let's just open up that plan brochure. Yep. So the black letters on the left there, let's open that up. The big selling point with these select dental plans is that there's day one benefits for everything, including your major services. So if you stop on this next page here where it says, how does it work? On the left-hand side, we talk about the network that we use. It is the Aetna Dental Administrators Network. And we give you a website link there if you need to help a prospect search for a dentist.
Okay.
On the right-hand side of the page, we talk about the 2 optional vision riders. Vision is only available as a rider with the dental. There's a L1 and L2 plan. The L2 is a richer benefit plan. It has a $10 copay for that annual visit and a $200 allowance for your frames and contacts, and it's once every 12 months. The level 1 plan is $130 allowance for the glasses, and it's once every other year. Okay, if we go to the next page, we have the 3 dental plans, the Value, Plus, and Prime. Again, big benefit is no waiting periods. So day one benefits for everything. If we just focus on that Prime plan and go down that column, you'll see there's benefit in and out of network. In network, it's a $50 deductible for an individual. For preventive services, twice a year, go in and get your teeth cleaned and checked. In network, it's covered at 100%. Basic services, things like fillings and extractions. Day one, it's covered at 60%. That's going to increase to 80% once you get to the second year. And even major services, things like your root canals and crowns, day one, it's covered at 25% in network, increasing to 50% for year 2 and beyond. The Prime plan also has an orthodontic benefit for dependent children. And the annual maximum on this Prime plan, year 1 is $2,000, second year, $2,500, and then third year and beyond, $3,000. So one of the big pain points with dental is that people tend to shop for it once they know that they have to have some work done. This plan solves for that by eliminating those waiting periods.
Yep, I like that.
Now we have one more plan on the next page. It's a very unique plan. It's a copay plan. All of your dental services are going to be covered for a copay of either $50 or $250 if it's a tier 2 major event like that root canal or crown. The copay plan, however, does have a 6-month wait for the major services. So as long as your customer doesn't have to have any major work done in the first 6 months, this plan is very attractive, especially for that person who wants to know before they even walk into the dentist what they're going to be paying.
Great. Okay.
And if you pop back to the quoting site there, okay, here's the select plans. These are the ones with no waiting periods. So you'll see the first one listed is the Select Dental Plus. Below that, you have with Vision 1 or with Vision 2.
Right.
Okay. And if we scroll down a bit, here is that copay plan, either the dental plan by itself or with the optional vision riders.
Got it. And these rates, just so you all know, guys that are watching this, that right now I'm only quoting one individual.
Right. And these rates never change. Once your customer purchases this dental plan, they're going to be locked in at that price.
Got it.
Okay.
Great. Okay, cool. I'm glad.
All right. Why don't you pick one of these? Let's just add one of these plans to the cart.
You know what? Let's say here, I'm going to go with the one because you see I'm wearing glasses and I crush mine. So I'm going to do the L2. I'm going to
Okay,
go with this one.
very good.
Okay.
And once you add that, put it into a shopping cart off on the right-hand side.
Okay.
Before we leave dental, one more thing. On the left-hand side, do you notice where it says save 10%? Excuse me.
Yes.
All right. Dental is the only product that we offer this multi-product discount with. And so as long as you're purchasing dental with any other product, we're going to discount that dental price by 10%.
Got it. Okay.
Okay. Let's go back up to those blue categories. Next category over is the fixed indemnity category. And we have two plans. We have a hospital expense protection plan, as well as a richer benefit plan, the access plan. Okay. Let's open up the brochure here. Okay. Perfect. So this is the hospital expense protection plan. And if we go to page, I believe it's page 4, we're going to see the entire schedule of benefits. There we go. So we have 6 plans to choose from here. And I know the print's a bit small, but it's an indemnity plan. So the dollar amounts that you see are the fixed benefits that we pay. And we pay the same dollar amount regardless of the provider, the doctor, or hospital. Any charges that exceed the benefit that we pay is the customer's responsibility. You'll see the plans have inpatient benefit, and I'm looking along the left-hand side there. There's a fixed amount for the hospital admission. There is also a confinement, a daily confinement amount. So why don't we just focus on Plan C? So for the hospital admission, it's going to pay $5,000 once per year for the admission. In addition to that, it has a daily amount of $150 per day, up to a 10-day max. Confinement due to injury is also $150, 10 days. Plan C does not have a specific ICU benefit. We'd have to go to Plan F for that benefit.
See it over here. Okay.
Okay. Also, let's just stick on that Plan F. Plan F is a richer benefit plan. It also has an outpatient benefit for office visits, for your doctor visit. And on that Plan F, we're going to pay $75 per visit, up to twice per year. And Plan F also has an observation benefit. So many times someone can go into the hospital and they're not truly admitted. They're just kept there for observation. This plan would pay $1,500 per visit once per year for an observation.
Okay. And
then it has emergency services, ambulance, ground ambulance is $250, air ambulance, $25,000.
Wow. Okay, it's good.
And it is good. And you'll notice that air ambulance benefit, $25,000 per trip, is on every plan, including the least expensive plan, the Plan A.
Yep. So and I do know my little local, within the town, it's a $14,000 helicopter ride.
Yeah. Yeah. And I hear they can get a lot more expensive than that.
I'm sure.
All right. Plan F also has a little lab and x-ray benefit.
Okay.
And if we go, let's just go one more page here.
Now, here's one question that I always get this from agents. Is COVID just considered another sickness?
Yes. Yep. Okay. With our plans, COVID is treated like any other sickness. So it would pay for that hospital admission and confinement. The confinement would be for the sickness benefit.
Okay. Got it. Okay.
All right. And the plan also includes a life association membership. It is required. Our plans are filed as association products. One of the biggest benefits is the telemedicine benefit. And so your customers will have 24/7 access to a doctor over the telephone. There's absolutely no charge to use it, and there's no limit to the number of times it can be used. They'll be speaking to a state licensed physician. So in many cases, that doctor is able to phone in a prescription for them.
Okay. Interesting.
Okay.
Interesting. This brings in a thought. Okay, and I'm gonna go right back to the cart because I want to see what this is running. So let's go to the C. We were quoting a C and then maybe even an F.
Right.
So let's just, I'm brainstorming here. So I have insured, potential insured that can't afford a short-term plan. It's not in this budget. Missed the ACA enrollment, so they couldn't get in. This is not bad.
No.
You
Yep.
know, yeah, it's not going to cover the whole bill, but it's better than nothing.
Exactly.
And for $60 a day, or I'm sorry, $60 a month.
Right. And you could easily combine this with another plan, something like an accident plan, just to further build that protection for the customer.
I like this. Now, talk to me a little bit about some restrictions and limitations here. What do we have to worry about?
That pre-existing conditions. So the plan does not provide coverage for pre-existing conditions, very similar to a short-term medical plan. So, you're looking at coverage for accidents and new illnesses.
Okay.
It is
nothing they had. How far is the look back?
12 months.
12-month look back. Okay. So
Yep.
they broke their leg last March and they have to go back in for the hospital for whatever. It ain't going to happen.
Correct.
They're within the 12 months. Okay. Got it. Now, do you all do your underwriting up front, or you're going to do your underwriting at the time of a claim?
For this product, I would say it's going to be done at the time of a claim.
Okay, got it. That's when. Okay, I'm with you.
Yep.
Cool. Well, I'm liking this premium. I mean, I'm looking at the F for those people that just miss their ACA enrollment and also just can't afford a short-term plan. This really is better than nothing.
It is. Now, let's also quickly open the brochure for the access plan.
Sure.
It's a higher premium, but the benefits are also higher.
Okay. All right.
We'll just and this plan does have a network that's associated with it. So if they can use any provider, pays the same benefit. But if they do use a provider in the nationwide First Health network, they're going to benefit from negotiated discounts. So the amounts that they end up paying over the benefit that we pay is going to be considerably less when using First Health.
Wow. Okay.
Okay.
I'm going to just do this just out of curiosity. This is just me. Let's see here. I'm just going to check. This is, I'm in San Antonio, huge. I'm just going to see which hospital networks right here. And I'll come back to this here in a minute. Let's go ahead and continue. I don't want to waste time on that.
Okay. Go to the next page, please.
Okay. All right.
All right. Here are 4 of the plans actually with the schedule of benefits. Again, the dollar amounts you see, the benefits we pay, customers responsible for everything over and above. And if you, their value fundamentals enhanced, all require eligibility questions. So they have to be able to qualify. If you have someone who cannot qualify, the guaranteed issue plan is available to everyone. There's no health eligibility questions at all. If we look, let's just take a look at the enhanced plan, the richer benefit.
Okay.
Hospital admission. It's going to pay $1,000 for the admission up to 10 times per year. In addition to that, the daily amounts are very rich. So the enhanced plans pays during the first year of the policy $3,000 per day for a confinement due to sickness. It's $6,000 per day for a confinement due to an injury. And those daily amounts will increase for year 2 and year 3. So we've built in a little loyalty reward there.
Now, out of curiosity, on the injury, is there any restrictions to it being a workplace injury, or maybe they're playing some sports, collegiate sports?
Workplace is fine. For sports, it can't be a professional sport that they are paid or compensated. Um, high school sports are fine. Collegiate sports, I believe, are excluded.
They are excluded?
Yeah.
Okay. Okay. Got it.
Okay. So there's the enhanced plan also has an ICU benefit, daily amount, and they're generous amounts. As we go down on the left-hand side, there's surgical benefits built in. And then there's outpatient and drugs on the enhanced plan there. For a doctor visit, we're going to pay $100 per doctor visit in the first year, up to 4 times, increasing to 5 times in the second year and 6 times third year and beyond. And that would be an office visit for a sickness or injury.
Okay.
This plan also has a preventive care or a wellness visit of $100 per visit up to twice per year. Urgent care, $200 per visit up to 4 times per year. And this plan also has an outpatient prescription drug reimbursement of $25 per fill up to 50 fills.
And this is if they end up getting a drug that's $5, then you're only going to reimburse $5.
Nope, we're going to reimburse 25.
Oh, okay, got it. So the full 25, regardless of the cost.
Right.
And then one more question. So if I'm quoting mom, dad, and a child, these are per person, right? Not for the whole household.
Correct, per person.
Okay. Got it.
Yep. There's some lab and x-ray benefit and ambulance as well.
Okay.
And then some transitional care on this plan.
Got it. Got it. It's
okay.
Pretty good. Let me go to the rates here just to refresh myself. These rates are still pretty good.
Yeah. So especially maybe you have someone, they have, they can afford the premium, but they missed open enrollment. This is some pretty rich benefits here for them.
Right. I like this. Very good. Cool.
Okay. So pick one of these, just add one to the cart for me.
You know what? I'm going to do the F. I like the F.
Okay.
Oh, look, my dental rate dropped. It was 55.
See, I was telling the truth.
It dropped to 51. Okay.
Okay, very good. Next category over, accident plans.
Oh, this is my area. I like
I am a big believer in accident plans. I have always carried one for my own family. We're healthy. I have a high deductible health plan. This just gives me a little peace of mind, knowing that if there's an accident, I'm going to have some cash to help me cover my out-of-pocket exposure.
Gotcha.
Okay. We have a couple of options here, more than a couple. Really, the Trio Med, the first plan that's listed, is 3 products all rolled into one. It's an accident medical expense. So it's going to reimburse your medical expenses due to a covered accident up to the benefit amount that you select, minus a deductible per accident of $250. The second part of the trio is a critical illness that's going to pay out the fixed dollar amount, the fixed benefit for a first time ever diagnosis of a critical illness, something like cancer, heart attack, stroke. The third piece of the trio is an accidental death and dismemberment. And you can see there's 3 benefit levels that are guaranteed issue, no eligibility questions. The benefit levels are $2,500, $5,000, and $10,000. Pretty straightforward.
Pretty straightforward. So here's one question that I get quite a bit, and I use this example, and then just a reinforcement for me. It doesn't matter where this accident happened, right? Workplace, they were putting up some Christmas lights and they fell down. I think you mentioned unpaid sports, but collegiate sports not going to have this coverage, correct?
Correct.
Okay, got it. But hey, I'm playing tennis with my buddies and I twist an ankle.
Right. Yep. So you've got some medical bills there. It's due to a covered accident. You submit the claim. We're going to reimburse you up to the benefit amount that you selected, minus that deductible of $250. Okay.
Got it. And then here's the critical illness. And And I guess here's a list of all the critical illnesses: heart attack, stroke, transplant, bypass.
Yep. So there's illnesses that will pay out 100%, like that heart attack, stroke, organ transplant. There's also some illnesses that will pay out a percentage, a 25% benefit there, like if someone has a bypass surgery or a heart valve replacement. Now, let's say we were quoting a $5,000 benefit. We actually have $5,000 in each one of these buckets for our customer. So if they have a heart attack, we're going to pay out that $5,000. If in the same year they also are diagnosed with an invasive cancer, we'll pay out that $5,000 again. And then there is a third category with these issues here: end-stage renal failure, major organ transplant, advanced Alzheimer's, coma, and it would potentially pay out again.
Okay. So is it only going to pay out one time a year and then reset on the calendar year or the policy year?
The policy year.
Policy year. So policy year to reset
for each one of the categories. Yes.
So he has another heart attack the following year, it's going to pay out again.
It pays out for a first time ever diagnosis of one of these critical illnesses.
Okay.
So if he has a heart attack, collects on the policy, honestly, you probably want to cancel the policy at that point. It's not going to pay out for another heart attack, although it would pay out if he was diagnosed with a cancer.
With some other condition, but not that same condition.
Exactly.
So once he's utilized that condition, that's off the table.
Right.
Okay. Got it. And now for the accident, is there a limitation to, let's just say, man, I'm accident prone? How many times they can use this benefit?
No, there is not. It's the benefit is per accident.
Okay, per accident, no limitation. Okay, great.
Right.
And then let's go into that third coverage, which is the death and dismemberment.
Right. So unfortunately, if someone would pass away as a result of a covered accident, this policy will pay out to the beneficiaries.
Okay, got it. And dismemberment, it's still the same benefit amount?
I think it gets pretty specific as far as, loss of one limb or two limbs. I don't have all of that detail in front of me right now.
Okay. No worries. And as far as limitations on here, anything we need to be mindful
of? Really, the first ever for those critical illnesses, keep in mind, it's going to pay out for a first ever diagnosis.
Okay.
So if they've been diagnosed with these, with a cancer in the past or with heart conditions, this may not be the right policy for them.
Okay. If they've already had it.
Right.
Prior to us getting them as a new client with this product.
Right. Yep.
Okay. Got it.
And all of the exclusions and limitations are always included in the back of the brochure. I encourage agents read through them, have your customers read through them. The last thing that either of us want is for someone to be surprised at the time of a claim.
Correct. Yeah, that's not a good thing. I agree with you.
No.
Okay, great. Okay, so we've tackled the Trio Med, which I have yet to do, but I've been doing a lot of this down here. So let's talk about this.
Plan Enhancer. I like to think of the Plan Enhancer as almost like an a la carte plan. The Trio Med has those three components rolled into one. Plan Enhancer is a little more flexible. So the Plan Enhancer is really the same accident medical expense policy. So it's going to reimburse medical expenses due to a covered accident up to the benefit amount you select minus your deductible. Now, with the Plan Enhancer, in most states, it's what we call a vanishing deductible. So during the first year of that policy, the deductible is $250 per accident. Second year, that decreases to $150. And by the time you hit the third year, we're going to completely waive that deductible. Okay.
Was this also the same with the other one with the Trio Med?
No, Trio Med is always just going to be the $250 deductible.
Okay, got it.
Okay.
And again, I'm going to assume, sometimes it's not good to make some assumptions, but unlimited amount of accidents here. There's no limitation.
Correct.
Okay, got it. So this is one a la carte product.
Right. Plan Enhancer is always going to include the AME piece. Now, the two.
So I was going to include the what again?
AME, accident medical expense.
Got it. Okay.
Okay. Now, there's two optional riders depending upon the state that you're in. Okay. The first optional rider is for cancer, heart attack, stroke, or you're going to see it on the quoting site as CHS. So if you include that rider, not only do they have the accident piece, but they would also have a lump sum benefit if they are diagnosed with the first time ever cancer and or heart attack, stroke.
Okay.
Yeah.
And so this one is just, hey, they have one of these illnesses, one of these cancers or a heart attack or stroke. It's going to pay the benefit amount.
Right.
Okay. Got it. And 90-day wait.
Yep. There is a waiting period there. 90 days for cancer, 30 days for heart attack, stroke.
Okay. Got it.
Okay. The second optional rider, which is pretty unique in the marketplace, is for sickness hospitalization. When you include this rider, if they are hospitalized due to a sickness and in the hospital for at least a 24-hour period, this is going to pay out the lump sum benefit.
All right. So here are the questions. And I'm glad you said 24 hours, because 24 hours and 1 day or 1 day are not the same thing.
Right.
Okay. Kind of odd, right? They go in at 11 o'clock midnight and they're out by 10 o'clock a.m. the next morning. Yes, it's 1 day, right? It's 1 day later.
Right.
But we didn't hit that 24-hour clock.
Correct.
Okay, so number one, agents, be aware it's a 24-hour clock. Second question that comes into my mind. Let's just say they're in the hospital for, COVID. COVID is any sickness, right?
Yes, you bet.
Okay. But let's say that they're in the hospital because of a heart attack. Okay.
Mm-hmm.
Would this plan pay the benefit here because they have this rider? And will it also pay here?
Yes. If it was sold with both riders, it would pay both benefits.
Okay. Got it. So I'm just thinking in my mind, I'm an agent. So if you're going to the hospital, you're either going in because of an injury or a sickness. Right? I mean, I don't know why else you would be admitted into a hospital. But I guess if it's an injury, well, guess what? I can take some money here on this accident, right? Because it's an injury, but then I can also get it here. No. I take that back. Not injury, right? That's
right. This is just for sickness.
So just the sickness. That's right. Okay. All right.
Yes.
Yeah, that's right. I lost my train of thought. It happens a lot. Okay. Okay. No. Very interesting. Okay. Okay. I like this. So 24 hours on here. And now what I have been doing, and so let's go back to the example of the ACA client that had an $8,700 out of pocket. So Nancy, you kind of tell me, this is what I've been doing. So kind of let me know is there something better that I can do? So what I do is I just scroll down and I'm going to go down here and I'm going to go to, there it is, 8,700.
Yep.
Okay. So I can do the AME by itself and it's $35. I can do the AME and add the sickness, $78 and change. I can do the AME and add the cancer, heart attack, and stroke, and it's $80. Or I can do the package, all three.
Right. Yep, okay. Exactly. I
right.
couldn't have said it better myself.
All right. And so I always get criticized, but I'm always joking. Nancy, which one is more better?
Well,
I just thought, I had my team and said, we're going to make you a shirt that says more better. And I'm like, yeah,
more
bring it
better.
on. So I always get agents asking me, well, which one is more better?
Yeah. And I think a lot of that comes from talking to your customer and finding out what their pain points are. If they have had a loved one who's been in the hospital due to COVID, they're going to be very attentive and listen when you start talking about that sickness hospitalization rider. Okay. On the other hand, if they've had family members who have had cancer, they know just how real those bills are for cancer, heart attack, stroke. So a lot of it just comes to talking and listening to your prospect and finding out what their hot buttons are.
Got it. So it's just offer it. Yeah, what I tell agents, how can, and I get so frustrated, how can a 17-year-old working at McDonald's upsell without even having the second thoughts? Would you like to upsize your fries or your drink? Would you like this? It's so natural. It just comes out. They're trained. For an agent, why can't you just upsell your product and just say, oh, hey, why can't you just, hey, how are you going to handle that 8,700? You got 8,700 sitting around in your, are you going to borrow it? Are you going to GoFundMe the account? Are you going to do a chicken plate? What are you going to do for this 8,700? Okay. If you don't got it, well, guess what? The hospital wants it. These hospitals are for profit. They want to make money. So how are you going to take care of it? So what I have been doing, Nancy, is before I give, and this is sales 101, guys, before I give my customer, my future insured, the price for their ACA plan, because I will tell you, they will focus on that first price. Okay. Before I do that, I tell them, I have built out a package that most of my clients, they take this package. And what I will do is I will include the biggest package. Okay. Because it's so much easier for me to go from a high number and drop it than to go from a low number and increase it. Okay. Sell skills 101. So let's just say that their ACA product was 100 and something. And now I come in with this package of 3 and it's 123. So I'm at $223. Mr. Insured, I put a package together that most of my clients take. Is $223. Now let me explain what this thing does for you. And I go right in. So I'll explain their ACA product and I'll tell them you're on the hook for $8,700. Okay. But I put this package together over here that's going to take care of that $8,700 for you. If you have an accident, you're going to get reimbursed up to $8,700. Okay. If you have a sickness, they're going to write you a check for $8,700. If you have a cancer or you have a heart attack or stroke, they're going to write you a check for $8,700. Now the money's going to you. You decide what you want to do with it. But you're going to have a bill at the hospital that says, hey, they want their $8,700. So it's going to go from the National General to you to the hospital, and it's going to zero you out. You are not going to have a bill. Am I off, Nancy, or am I kind of on target?
You are on target. And I think one of the key things is your customers don't know that these solutions exist. So if you don't tell them and present it, they're never going to likely ask for it. So you need to be a good agent and show them what their options are.
I agree with you. And I tell you what, guys, if you're not offering it, some other smart agent is going to. And I will throw you, Mr. Agent, under the bus. I can't believe your other agent didn't offer you this. What kind of agent is he or her? Or what kind of agent is she? I'm going to take care of you. I'm going to put this package together and rock and roll. Now, one thing I do, okay, if they decide, no, I don't want it, I love rejection forms. Okay, I'll get them to sign. No worries, no big deal. Maybe we'll talk about it later, but do me a favor. I just want to cover myself because I'll have a lot of insureds tell me, Well, why didn't you offer it? So if you don't mind, just sign here, rejecting that you don't want to do what most of my clients do. Okay. That you don't want this extra benefit. Okay. That you have $8,700 in your bank that you're going to pay if you get hospitalized. So just go ahead and sign here. Guess what? They don't like signing that. And I have people that have told me, now I do a lot of my stuff telesales. So I have DocuSign. I'll DocuSign it to them. Okay. And a lot of them, of course, don't sign it. But guess what? I have a record that I sent it to them. Okay. And if they're in my office, I have a storefront office. So if they're here and they refuse to sign, right in front of them, I will write, time is 10:52 a.m. Insured, refused to sign. Hey, all I'm doing is I'm CYAing myself, because guess what? Some of these insureds, when it comes down to throwing you under the bus, I've been in business 20 plus years. It happens. It happens, to protect their pocketbook, they will take you down. But that's just me being a little cynical. And it happens 20 plus years into business. So CYA yourself as much as you can, agents. All right. Are we going? Do we continue, Nancy?
We sure can.
I know.
We
I just
can.
went off. I could keep going off. All right. We keep rocking and rolling.
You know what? And we can take kind of a quick look at the remaining categories here.
Sure.
Again, all of the products that we have can be sold standalone or bundled together.
Okay.
The next category is critical illness. This is built on a term life chassis, so it's also a term life policy. Benefits start at $25,000. They go up to $100,000. So $100,000 is the max.
Okay.
They are going to pay out for a first time ever critical illness. I believe it's like 17 different specific critical illnesses that are named in the brochure.
Okay. Got it.
There's also a term life policy. So if you're looking for a very simple term life policy, 20,000 up to 100,000. As long as they can answer no to all of the knockout eligibility questions, we're going to issue the policy. There's never a paramed exam that's going to be required for these. When you look at the brochure, it's going to tell you these rates are guaranteed not to change for the first 5 years. Contractually, after that, we could increase the rate, but we're not going to. We're going to keep these premiums the same monthly premiums for as long as they keep the policy.
Got it.
Okay. There's also a cancer policy. So it's cancer and heart attack, stroke. It's just more narrowly defined than the critical illness policy. So it's going to be priced a little lower than the critical illness. So benefits for the cancer, heart, stroke policy start at $25,000. They go up to $75,000. The idea here behind critical illness and behind cancer is to give somebody a pretty nice check upon diagnosis of one of these illnesses. They can use that money for anything that they want, but just imagine if you're diagnosed, now you're going through some treatments, maybe you're out of work, you get a check for, let's say, $50,000. That can go pretty far as helping you pay your mortgage, making your car payment, continuing to pay your health insurance premiums, and maybe childcare, or even treatment that wouldn't be covered under your ACA plan because maybe you want to go out of network. Maybe you want to do a treatment that's deemed experimental. That's not going to be covered under your Affordable Care Act plan. This would give you some additional cash here to maybe seek the treatment that you really want.
Yeah. And I will tell you, I'm going through it right now with my brother-in-law's mother. And so they had to rent an apartment. They don't want to travel back and forth 3 hours during her treatments, and she's going through chemo. And so the husband is not working because he's taking care of the wife. But their bills are not stopping. Yeah. Now they've got good health care, and the health care is covering their treatments. But now they have all these other expenses that are not going to stop. They're going to continue. And so this money, yeah, it does go a long way. Now, luckily, they don't have a cancer plan, but they are financially well off. So it's not an issue, but They're the exception, not the rule.
Right.
So great. Cool.
Good.
Cool. All right, guys. So here's the game plan. So we've talked about these additional products that you can add to complement an ACA product, or potentially if they can get into an ACA product for whatever reason, then you could give them a standalone product without the ACA. And it's better than not having, being naked, not having anything to help you out. So here's what I would ask you to do. Go through your immediate uplines. Okay, if you're watching this, ask your immediate upline for contracting. If you do not have an upline, hit me up, guys. When we post this video out, you'll see my contact information. Get a hold of me and we'll send you out contracting. But you definitely want to go out to your immediate upline and request this. So thank you for being on the call, Nancy. Thank you so much. I've been selling this and I learned something. I learned a few things, reinforced some things that I've been telling my customers. So thank you so much.
It was my pleasure.
Okay. All right. So we'll end it there. Why don't we pick up on the short term and we'll just start fresh on the same recording if you're okay with that.
Yep. Let me just check my schedule here a bit.
Okay.
I want to make sure I don't have something coming up. Right. I am good to continue. So
Okay.
We'll hit the short term.
Okay. Let's hit the short term here. Okay. Got it. Okay. So I'll just restart this thing. Okay. So okay. Ivan's my editor here. So, hey, we cut the other one off. That's going to be one video. This is going to be the second video. So I'm going to start from scratch again. Hey guys, this is Luis Moreno here, and I am with Nancy Vander Velde and her counterpart, Phil, what's his, how do you say his last name? Mishler. They are with National General, and we've done one video that you can go back to my channel and watch that dealt with people who have an ACA plan and you're trying to supplement it with one of National General's products so that the out-of-pocket exposure for these insureds is minimized. Now, what we're going to be talking about here, and this is because ACA is not the answer for everybody, okay? Maybe ACA doesn't fit somebody, and maybe ACA, maybe they can't get into an ACA plan. So we're going to talk about short-term medical. So Nancy, I'm going to let you kind of guide me on what to do here, and let's rock and roll.
All right. Well, thank you. We are here at the homepage for our quoting site. And I recommend that we use this quote and enroll feature. It's very streamlined. So if you can just start, please, and put in a zip code.
Okay.
And this is Texas. I will mention that plans vary from state to state. So what we're looking at is going to be specific to Texas. On this next page, I'll point out the child only box. We can write a short-term medical plan for a child. A parent does not have to be included in on that coverage. And it comes up pretty frequently. It might be a court order situation, or maybe it's just too pricey to add a dependent to a group policy. This will give you some options.
And guys, two things there. I run into this quite a bit in my agency. So I'll get a call from one of my insurances. They got divorced and now the court is mandating that one of the parents provide insurance. So if this insured has a group policy, adding one child is the same thing like adding 10 children. Is one rate for children, and on a group policy, Nancy, sometimes it's like almost $1,000 a month premium. Crazy just to add a child to a group policy. Okay. Now, if you already got some children on the group and you're paying for it, adding another one doesn't change the premium. But that's one thing. The other deal that I run into is, let's just suppose that this insured doesn't have a group policy. Okay. So adding a child to an ACA, we can do it, but sometimes it creates some issues because the primary holder doesn't claim that child. The other parent claims the child. So it creates some subsidy issues. So a lot of times doing a short-term plan. So why don't we do this one real quick? We'll knock out a short-term plan for a child here.
Okay.
Okay.
So simply enter a gender, date of birth, someone under 18.
Okay. And prior medical. So let's assume that the child was insured with one parent. Okay. And the court, and they're going to make this effective February. Okay. Show plans. Now, while this is loading, guys, I will tell you the fact that you do not have to insure a parent is huge, guys. There's another major carrier that requires that the parent be insured, which makes the premiums a little tough to swallow for these people.
Good. Now, on this next page here, we're showing you a suggested package of coverage. This is really a nice reminder to agents that you can bundle products together to give more protection. Once you know our products better, you can even customize the packages. You can build your own package. So you can build a package that's specifically for child only, or you can build a package for a couple in their 60s. So just keep in mind, right now, use this as, just a reminder, but let's go ahead. And if you scroll up, we're going to click on see all plans, and that will show us everything that's available. We're on the short-term category, and right there, just below these blue tabs, you're going to see payment method and term length. Make a note, we offer a very attractive single pay discount. It's a little more than 60%. So most customers probably need monthly, but when you have that customer who does have the financial resources to do a single pay, it's a nice way to save them some money.
And did I hear you right? 60%?
Did I say 60? I meant to say 20 if I did.
Okay, yeah, I heard 60. Okay, so 20%.
Thank you for saving me there.
Okay, no, I was like, hey, that's a great discount. Huge. Okay.
No, single pay is a little more than 20%.
Okay.
And it's available for terms of 364 days or less. Okay. If we leave it at monthly and then look at term length, you've hit the down caret there. You're seeing all the options. It will be a little lower rate for 6 months or less, just because our risk exposure is less. If you notice the last option there, the last option is 2 12-month policies. Now, this is a great solution for someone who knows that they need to stay on coverage longer than 12 months. You can sign them up for 2 of those 12-month policies all in one enrollment. It costs a little bit more, but there's 2 big benefits to the customer. Number one, they're guaranteed to be eligible for that second policy, so they don't have to requalify. They don't have to worry about what happens if my health changes and now I can't get that next policy. They're locked in. The second big advantage is in the second policy, we will cover their pre-existing conditions as long as it's not an excluded condition.
Now, between one policy year and the second policy year, are the deductibles and the out-of-pocket max resetting?
Yes, they do. So they are 2 separate policies, new deductible, new out-of-pocket max.
Got it.
Okay. This is what we refer to as the 2 consecutive plans.
Okay.
If you would, change it back to just a 12-month policy for me.
Okay.
And now to the right of that, we actually have some additional renewal options. Scroll back up a little bit. Okay. So if you're on a 12-month plan, you can do 1 renewal or 2 renewals. The 2 renewals would actually be 3 years of coverage. And you can either just lock in their insurability, which would just be where it says 2 renewals, or you can also lock in that premium. So it will be the same monthly premium for all 36 years or 36 months.
Okay. So a little bit higher there. And if I fix it. Okay. So the initial premium is a lot higher if I lock it in for those 36 months.
Right.
Okay. Got it.
Okay. Now we are quoting a minor here. So we're not seeing our preferred rates. I would actually, let's take a look at the plan highlights itself. And then I'm going to ask that we just kind of start over with a quote for an adult.
Sure.
So I can demonstrate a couple of things. Let's go ahead and open up that plan brochure. All right. And if I can have you go to page 3. On the bottom half of the page here, we talk about the network that we use. We use the Aetna Open Choice PPO network. It's a very broad nationwide network. We give you a website there if you need to help a prospect search for a doctor or hospital in their network. Two of the highlights above and on the left that I want to talk about, next day effective dates. You can sell this policy. It can be effective the next day. Your customer will have coverage if they have an accident or need to schedule preventive care. But I'd like to point out there is a 7-day wait on sickness. Okay. Now, with a little planning, you can avoid that 7-day wait. And this is what I mean. If you submit an enrollment at least 8 days prior to the effective date, then they're going to have coverage for both accidents and sickness on the effective date.
Okay.
Okay. Just below that, one of the rich benefits on all of our plans is urgent care visits. The way it works at urgent care is your customer is going to pay a $50 fee. We're going to waive their deductible, and then they pay their share of coinsurance on the rest of the bill. Now, we have several 100% coinsurance plans. If your customer has that, they know when they go to urgent care, all they're going to be paying is that $50 access fee.
Okay, got it.
Okay, let's go to the next page. All right. Now, this plan is, what we've done here is we've taken all of the short-term plans, the different deductible and coinsurance options, and grouped them into 3 important groupings. On the left-hand side, you're going to see the essential PPO plans. That's a reduced benefit plan. The coverage period maximum is going to cap out at $250,000. That's the max that we're going to pay out. And there is a limitation on outpatient services of $15,000. Okay. For those reasons, I only use the essential plans when I absolutely have to squeeze it into someone's budget. What I would prefer that you sell are the enhanced PPO plans in the middle. They all have a $1 million max benefit.
I'm going to go back to the essentials real quick.
Yep.
And so in the ACA world, the deductible is built into the out-of-pocket. In the short-term world, the deductible is one amount that they have to meet, but then they also have to meet the full out-of-pocket.
Right. So when you're looking at this chart here, let's just say that plan on the far left, it's a $5,000 individual deductible. The coinsurance, once they meet that, we start splitting the bills. They pay 40%, we pay 60% until they've paid an additional $7,500. So their total max out of pocket on this particular plan is going to be the $12,500.
So they've got to meet. Yeah, exactly. So you got to combine both of these. Okay. Got it. Okay.
Yep. All right. Back to the enhanced plans. In the middle there, they all have a $1 million max benefit. They don't have that restriction on the outpatient services.
Okay.
I would say between 90 and 95% of our sales are in this enhanced PPO category. Okay. Now, for a customer who wants it, we do have richer benefit plans. Those are going to be the copay enhanced plans. In Texas, we have 2 options, a $6,000 and an $8,000 deductible, both at 100% coinsurance. So the customer's total max out of pocket in this case is just the deductible. These plans cost more. They have a $5 million max benefit. They're the only plans that have an actual copay for a doctor visit, either $40 or $60 if it's a specialist. They're also the only plan that has a pharmacy benefit, and that's going to be a $10 copay for generic drugs only, used for covered conditions with a maximum benefit of $3,000.
Is there a formulary for the prescription drugs?
I do not have a formulary. Okay. It's generic drugs. Okay. It has to be a generic.
Okay.
All right. And
Aegis, let me make one thing out. And I will tell this for a lot of my insureds. I love doing these 100% plans. Now, they have it reversed here, which is fine. You just got to be aware of it. 0 means 100% in my book. 100%, the insurance company or the carrier 0% for the insured. It is super easy to explain. Okay. I try explaining these 50s and these 20s and these 40s. And I actually will write out a sample, and some people get it. But when you have this 100% option, all they have to worry about is a deductible. Once they pay their deductible, the plan will pay 100% beyond that. So these 100% plans are great for the insureds. They're a little pricier, I would assume, right, Nancy?
Yep, they are. Okay. And speaking of that, if you go back and look at the enhanced plans there, one of really, I feel, is our sweet spot. One of the best values is that $5,000 deductible at 100/0. So once they meet the $5,000 deductible, they've met their max out of pocket. And we'll show that when we get back to the quoting site. If you go to the next page here, here's just a summary on these solutions that we have for coverages beyond 12 months. So on the right-hand side, we've got those 2 consecutive 12-month policies. On the left-hand side, we've got the renewal options. Again, either 1 renewal or 2 renewals, and either just locking in the insurability or also locking in the fixed premium.
I like it.
Good. If you go to the next page, there, in many states, there is a guaranteed issue option. Now, you're not going to use this often because your customer who cannot qualify for the standard plans, they have some health issues going on. So they probably are better off on an Affordable Care Act plan. But if you're outside of open enrollment and they really have no options, don't let them go uninsured. You can get them a guaranteed issue plan. They're going to have up to $100,000 worth of coverage if they have an accident or a new illness. Now, you may be thinking, Nancy, 100,000 is not that much, but I think it's 100% better than somebody going uninsured.
Oh, yeah.
Okay. If you go to the next page.
Now, out of curiosity, do we have a guaranteed issue product in Texas?
I believe we do. No, it's not going to show up. I don't think it shows up for child only options, but okay. I think we're going to see it when we go back and quote an adult.
Got it.
I'm going to let agents read through the examples of covering out-of-pocket expenses, but again, it's really the strategy of helping your customer by including supplemental plans, an accident policy or a critical illness policy to help them cover their out-of-pocket exposure, their deductible, and their co-insurance.
Okay, got it. Love it.
All right, I do want to talk about the Life Association membership. Our products are filed as association plans, so when your customer purchases a short term, they're also purchasing a monthly membership to the Life Association. The biggest value item here is telemedicine. So customers have free access to a doctor 24/7, and it is free. There is no charge to use it. There's no limit to the number of times they can use it. And they'll be speaking to a state licensed physician who in many cases can even phone in a prescription for them. And in about 50% of the calls that we get, that's exactly what that doctor's doing. Okay. So, as you're coaching customers on how to get the most value out of their plans, whenever medically appropriate, use telemedicine. It's completely free. Then go to urgent care. Then schedule a visit with your doctor. And if you have to, go to the emergency room. Okay. As far as the association, there are other discounts and savings available. Customers get a separate welcome email from the Life Association so they know how to take advantage of these things. There's also going to be a free prescription discount card that they can download, take to the pharmacist so that if they do have to go get a prescription, they'll be able to save some money.
Great.
The last thing I like to mention with the association is that membership can be kept as a standalone product even after the short term expires. And if somebody's using telemedicine, I think it's worth keeping it. If they're not using any of the discounts and programs, then they're going to want to call into member services and cancel it. The association membership does not cancel automatically when that short term expires.
Okay.
Okay. Rest of the brochure is the limitations and exclusions. I really do encourage you to read through them, encourage your customers to read through them. It's important that they know that this is not part of the Affordable Care Act plan, that this does have a different set of regulations. Always make sure customers understand that pre-existing conditions are not going to be covered. And we use a 12-month look back period to determine what's pre-existing. So in that last 12 months, if they've taken medication, seen a doctor, or had signs or symptoms of a condition, that condition's not going to be covered under their short term. Okay. Short term also does not cover pregnancy, so it's not suitable for everyone. It does not cover mental health. And if you go to the next page, there's a handful of surgeries we don't cover. And it's right there. Yep, you've seen it. Fourth bullet down on the left side. Surgeries for ear tubes, tonsils, adenoids, hernia, sinuses, or deviated septum. And when I think about these surgeries, there's usually a history of health conditions leading up to them. I think what we've done is really just made it a better claims experience by excluding them up front versus going through, a whole claims process at the end and then finding out it wasn't covered.
Yeah, got it.
Okay.
Got
All
it.
right.
And again, this is sometimes, they miss their enrollment where they can get this to protect themselves. And then when enrollment season opens again, then we can plug them into an ACA plan.
Mm-hmm. Exactly.
Great.
All right. Let's hop back to the quoting site. Okay. So again, we're quoting a minor here. If you scroll down on the left-hand side, here's all the different deductible and coinsurance combinations. In that second grouping, the deductibles 2,501 to 5,000. Fourth option down is the enhanced 5K 100/0. That's that plan that has $1 million max benefit. Once your customer meets the $5,000 deductible, they're covered at 100%. And it looks like this premium would be $289.84 per month.
Right. I see it. Yep.
Okay. And again, you're going to see the essential plans. Essential plans is a reduced benefit product. You'll also see the copay plans. That's going to be the richer benefit plans with that $5 million max benefit.
And I'm seeing PPO Aetna. So you guys are buying into that network.
Yep, we partner with Aetna. So your customers have access to that Aetna Open Choice PPO network. And scroll back up for me a second. In most markets, we do offer a second network option. Scroll up a little bit more. Okay, looks like we don't offer it in this market. In many markets, we also offer a Cigna network. And if it's available, you would be able to select it here.
Okay, got it.
Okay. How about let's do this. Let's go back to the home page and let's just plug in demographics for an adult so that I can show you the preferred rates that we have available. Maximum issue age on short-term medical is 64 and 10 months. And I do want to mention that we do not require citizenship. The enrollment form will ask for a social security number. It is never required. You can always just skip over that. So if you have someone who's here legally, but maybe they're not eligible for ACA, short-term medical could be a good option for them. Got it.
Now, in the short-term world, if they have no prior medical, how does that affect?
Okay. They are still eligible potentially for a product, but by having prior medical, they're going to qualify for a little lower rate, and they may also be eligible for preferred. If you click on that little yellow circle there, it'll just give you a little information on what we're looking for. So they have to have had some type of other coverage, and we're lenient on that, for at least 9 of the last 12 months. If they answer yes, they're going to qualify for a lower rate.
And then I'm assuming on the app, they're going to have to list the carrier and the policy number?
Actually, we do not check.
Okay,
They do not have to disclose that. We do not verify it.
got it. So let's show plans.
Show plans. On the next page, it's going to load in the package. We're going to click on see all plans. Okay. And now you're going to see for each plan, you see there's two rates. Let's just go down to that enhanced 5K 100/0 plan. All right. The monthly premium for this plan is $734.67, but as low as, does that say $599.73?
Yes, it does.
Okay. The as low as prices if they qualify for preferred rates. And it's up to you as an agent if you want to go through the additional screening. If you decide not to, you can just proceed standard and click the blue button. But let's go ahead and click on that orange proceed preferred. It'll bring up the 6 qualifications. So number 1, they have to be a non-smoker. Number 2, they have to have had other health insurance coverage for at least 9 of the last 12 months. Number 3, they cannot own or lease a motorcycle. Number 4, they have to have a good driving record in the last 2 years. So no DUI, DWIs, no more than 1 moving violation or speeding ticket. And number 5, in the last 5 years, no medications for high blood pressure, high cholesterol, anxiety, or depression. And that is something that we do verify. And again, the look back is 5 years. Okay. And number 6 relates to weight. Males must be 240 or less and females 190 or less. And then in the upper right, there's a drop down under preferred premium. You need to select yes or no that they meet these qualifications. We'll say yes, and then we'll click on the orange update button.
And there's the 590 now. Got it.
Right. And that adjusts that entire premium column. We're now just seeing the preferred rate, which is a 20% savings. And then if this is the product that we want, we would click proceed preferred to add that into our shopping cart. So I do want to mention the 5K 100% plan is my first choice that I go to. Now, if this is out of my customer's budget, if this is just not going to happen, my second choice would actually be 2 plans above that, the enhanced 5K 50/50 plan. With that plan, you see we're shaving quite a bit off that monthly premium, almost $200 a month savings. But with that plan, their total max out of pocket is $10,000 for an individual versus just the $5,000 on the 100% plan.
So it's got a $5,000 deductible and then an additional at 50% co-insurance, another $5,000 out of pocket.
Right. And you'll notice the 80/20 plan right below that has those same numbers. So the 50/50 and the 80/20 plan both have the 10,000 max out of pocket. If that's why I would go with the 50/50 plan as my second choice.
Same out of pocket. They're just getting their money some other way, a little bit quicker.
Yes. Yeah.
I'm with you. I like that. That's a good alternative. So either the 100% 5K or the 5K with a 50/50.
Right.
Yep.
Okay.
Now, out of curiosity, if I were to do, let's just assume I'm going to get out of this and my insurance says, no, I don't want that. I like this option, this one right here. And I'm going to proceed there. Now, it kind of guided me thinking I'm going to go here to this accidental plan. I know they're on the hook for 10K. So I'm going to go down here and maybe do the 10K here and add 10K for AME, 10K for sickness, potentially do the entire package and add that. Now, for the same premium of $589, where they're only out 5K, now I'm at $530. And if they are hospitalized for a sickness or they have an accident, they're really out of pocket, no money.
Right.
Can we package that out like that? I mean, I'm sure that's okay, right?
Yeah. Yep.
I mean,
and There is that on the AME, there is that deductible of 250.
Oh, drop in
So
a bucket. Drop in a bucket.
Absolutely.
Hey, that stakes
Absolutely.
me and my wife, and that's just covering me, not even her.
Right.
Yeah,
So
yeah,
yeah, and so this is where you can build that package of protection, give those solutions to your customer, because many people don't have $10,000 in a bank account to cover an unexpected bill, and they don't have a plan. What happens and they need to? Are they going to ask family members? Are they going to, rack up credit card bills? What are they going to do?
yep. And I will tell you guys, again, sales 101, start high and work your way down. And I even have my 7-year-old. He worked me so good, Nancy. So he helped me wash my car this weekend. And guess what? He started off, he was out for an hour. I mean, we had time this weekend and we were cleaning my car and he's doing his thing. And he starts off with, Dad, I want $50. I'm like, man, I could have sent this to somebody to do it and not spend hours. And he was like, but I'll take 20. And I'm like, yeah, that little sucker. If he would have said 20, I probably would have offered 10 and thought I got a deal. But I think I got a good deal when he started at 50 and he took 20.
Yep.
So
Great.
he played me well, that little guy. But in the real world, guys, I will tell you, start high and work your way down. So you can start off with building this package out. It's $530. If the insured is like, oh man, I can't do this, it's not within my budget, then okay, well, how about this, Mr. Insured? Okay, let's get rid of this package of 3. Why don't we do a package of 2? Okay. And if it's just me, I'm going to go with the accident and the sickness. That's a preference. Okay. That is, to me, that's more better. Okay. So there it is. So Mr. Insured, I got your rate down to 479. So now, yeah, we got rid of the critical illness and the heart attack or stroke, but I got you an accident and I got you a sickness. So if you're in an accident up to 10 grand, you're not going to pay a penny. Then your insurance is going to pay beyond that amount, the insurance kicks in. Or if you're in the hospital, again, you're going to be out no money. We're going to net zero you here. Well, man, I can't really afford that. Okay. All right. Hold on. I got another solution for you. How about we do this? Let's just go add the accident. Man, Mr. What are the odds? A car wreck. Okay. Man, I know your wife is asking you to go take off those Christmas lights because we're in January. Take off those Christmas lights, honey. Get up there and there you go, being a hero, climbing that ladder. So I'm always watching the bloopers on YouTube and guys falling off ladders or hanging from the gutters, and it happens. It happens. So now I added an extra $40 and I'm rocking. Now I'm down to 429. So again, I work down instead of working up.
Good. Perfect.
Not bad.
And don't forget, we in most states have some very rich dental plans. Dental plan is the second most requested insurance product behind health.
So there we go, guys. One package. You can throw in the dental here. You can pick a dental plan here with a high level of vision. We throw that in. And Nancy, they're going to get one bill, right?
Yes. And payment will either be credit card or a debit to their bank account. When you do this bundled sale, it is one total charge each month.
So Nancy, and when you do the app and you apply, so you'll get to where you apply, and then the insured will get an email or a text, depending on which one you choose, right?
Mm-hmm.
And then they'll have to sign the app and rock and roll.
Yes. Now, on short-term medical, there is one piece of underwriting that we do on the front end. And it takes only seconds, and it happens right after they do their e-signature. What we're doing is we're running it through an IntelliScript check. So basically, we're checking the database of pharmacies to see if they've taken any medications in the last 5 years. Number 1, for any of the ineligible conditions. And number 2, if you've submitted it at preferred rates, we're checking for medications for those 4 conditions. high blood pressure, high cholesterol, anxiety, or depression. If it does identify one of those medications in the last 5 years, the system's going to counter offer at a standard rate. Okay. So I like agents to know that IntelliScript is part of our application process.
For the short term only.
For the short term only.
Okay, great. Now, just a question. Let's just say a year from now. Okay, we're in January. They ride this out to the end of the year, and they decide they want to enroll in an ACA plan for whatever reason. So we get them into the ACA. Are they able to get rid of the short term and keep their accidental and their dental?
Absolutely. So let's say you sell it for a 12-month or maybe even 2 of those 12-month policies. Somebody's needs change. They end up needing to be on an ACA plan for next year. If that policy has not already terminated, they can certainly just call into member services. We're going to cancel at the end of their paid through period. And they can cancel, any or all of the policies that they have with us.
Okay, got it.
It's only the short-term medical that is sold with a limited term. All of the other policies are just annually renewable policies that will continue on as long as the customers keep making their premium payments.
For the accidental, the dental, are the rates locked in and they keep it for as long as they want?
Yes.
Okay. Awesome. Well, I'm loving this, guys. So again, ACA is not the answer for everybody. Okay. Sometimes people miss enrollments. Sometimes, maybe they're in between jobs and they have a waiting period with their new employer. So we can bridge that gap, or whatever it may be, court mandated coverage for a child. So, we've got some solutions for these insureds. So Nancy, thank you so much. Again, with Nancy with National General. And I've been selling these products and I still learned something today. That's what I love about doing these kind of videos and watching them. There's always something I learn.
Well, it was my pleasure to be here with you. And thank you, Phil Mishler, and I look forward to working with you. If you have questions on the products or the systems, the quoting site, you're welcome to reach out to either one of us as well.
Perfect. And guys, as far as getting a contract with National General, you want to go through your immediate upline. You get them to give you contracting. If you don't have an upline, get a hold of me, guys. We'll send you out contracting so that you can start offering these products to your potential insureds or even your current insureds where you want to help them with their out-of-pocket exposures that they're on the hook for. So great products. I'm loving this plan, and take advantage of it, guys. If you're not selling it and your insureds come and see me, guess what? I'm going to sell it, and I'm going to throw you under the bus. I'm going to tell you, well, why didn't your agent offer you this? I cannot believe they didn't offer you this. They didn't do a good job with you. So guys, that's just the way the world is. Make sure that you're offering these products and give your insureds the ability to take them, make a little bit of extra money. Who's going to say no to that? And but ultimately, we're trying to protect our insureds. Okay, we're trying to limit their exposures. So don't leave them on the hook. So with that, thank you for being on here, Nancy. I appreciate your time. And I'm looking forward to putting a heck of a lot more business with you guys.
Sounds good to me.
Okay, guys. Thank you so much for watching this video. All right, guys. If you like what you saw, here's what I'd like for you to do. I've got some extra videos here for you to watch. And if you would, click here so that you can subscribe to our channel and make sure you hit the little bell icon so you can get updates like these in the future.